Good morning, very good morning, dear boys and girls. And today I have come to you with a very important, fantastic, and very much necessary so far as accounts and management account is concerned. And this chapter is cash flow statement. This cash flow statement in some universities it is included in accounts and in some universities it is included in your management accounting. In Calcutta University it is included in 6th semester BCom under financial reporting. But we have to see there will be a lot of sea change in the syllabus of Calcutta University because due to implementation of new education policy, so we have to wait that this chapter will be coming at what stage. But definitely it is sure that this cash flow statement is one of the most important chapter so far as accounting is concerned, especially in the corporate world. If you see the cash flow statement, it is just like we have to go for the definition. We have to know the features, the importance and the limitations of cash flow statement. This type of theory questions are also coming. And another one important theory question, that is your difference between cash flow and funds flow statement. So in this class, we will have a complete course on cash flow statement. Like we will read all the theories with notes. We will go for all the problems of different universities and we will concentrate on problems of professional exam. And if you go through the cash flow statement with my 30 years of teaching experience, I can assure you that there is maximum 10 adjustments in total, whether you read BCom, whether you read CA, CMA, CS, whatever may be, or ISC, etc. But total adjustments in cash flow statement is not more than 10, or if you can segregate the adjustment then it will be maximum 12. So if when we will be going through the problem, if you concentrate on the adjustments, you will see most of the adjustments are similar in nature. Anyhow friends, let us start with the cash flow statement, and we will first know what is cash flow statement. The cash flow statement is just like a inflow and outflow of cash. If you compare a organization as a human structure, human being, the function of the heart is centralized operating system. Blood is coming in and blood is going out from the heart. So when the cash is coming into the business, this is called inflow of cash. When the cash is going out of the business, it is called outflow of the cash. However, for better understanding presentation and management information system, this cash flow statement has been divided activity wise. You will see there are three main activities in an organization. One is your operating activity, second investing activity, third financing activity, and all these cash inflow and outflow are put under these three activities, right? And the format of this cash flow statement is given in accounting standard 3, and in this accounting standard you will see there are two methods of preparation of cash flow statement. One is your direct method, another one is your indirect method. If you see the questions coming frequency, then you will see more number of times or many number of times you will face the question of indirect method, and direct method also come, but it comes very less number of times. Therefore, I should advise you that you go through both the methods but keeping stress on indirect method. So let us start with the definition, the features and advantage and limitation of cash flow statement. Let us start with the meaning and concept of cash flow statement. So cash flow statement is a statement prepared by a concern showing inflow and outflow of cash and cash equivalent. Cash, bank, marketable securities, these are called cash and cash equivalent. This is equivalent. And it is prepared for a definite period of time. Definite period of time means it can be prepared for a month, for a year, for a day, like that. It is for a definite period. This cash flow statement shows the effect of all financial transactions, cash position over a period of time. The second is your features. It is a periodical nature. That means it is prepared for a particular time period. It is dynamic because movement of cash changes, always changes. The cash flow statement, if you prepare for a today, is different from the tomorrow. It shows the movement of cash from date of last balance sheet to the date of next balance sheet. It establishes relationship between net profit and change in cash position of the firm. The cash flow statement does not involve matching of cost against revenue. This is not considered in your cash flow statement. How much is my income, and income must be matched with the cost. Suppose if goods have been sold for rupees 100 and cost is 60. Comparison of cost and revenue is not coming under cash flow statement. Whatever cash coming in and cash goes out, these are only shown in the cash flow statement. It reflects how the financial position changes over a period of time, and it is divided into three activities. One is your operating activity, investing activity, and financing activity. So under each activity, what is the inflow and what is the outflow, that is considered here. If the inflow is more, outflow is less, then it is a favorable balance will be there in that particular activity. That is called net cash inflow. If the outflow is more and inflow is less, then we call net cash used. Net cash used. In case outflow is more than inflow, right? Then objective, it has got it shows the cash earning capacity of the firm. It also shows the cash earnings of the firm from different sources, like operating is a source, investing is a source, and financing is again a source. How the money has been generated and how the money has been utilized during the year, right? Then, to give answer to various perplexing questions often encountered by management, this is helpful for the management. Management get lot of answer for their questions from the cash flow statement. If the management want what is the cash position under operation, they can know it. What is how much cash utilized for investment, they can know it. How much cash inflow in investment, that they can know it. What is the idle cash, how the idle cash has been used, how much cash has been excess, or if there is a shortage of cash. So all these informations are very, very important for the management. Management can make a cash planning. This is important, that is cash planning. You can just remember one word so that you can write, this is cash planning. This is your idle cash. This is your questions of management are answered by cash flow statement. And comparability. Suppose a cash flow statement of current year, the previous year, that can be compared. Cash flow statement of one industry can be compared with other industries. That is very much important. So, in cash flow statement, the management can take also capital budgeting decision. Capital budgeting means, that is, if the company wants to expand, wants to acquire another business, they need cash. How the cash can be managed, how the cash can be generated, all these things are the decisions of capital budgeting. Then we are coming to the limitations of cash flow statement. Cash flow statement does not consider non-cash item. Only cash items are considered here. Non-cash item is not considered. It cannot reveal actual profit. In cash flow statement, we are not interested for actual profit. Projected cash flow statement is just, projected means the future cash flow statement is just a financial tool for a short-term period. Companies Act provides that in conformity of PL and balance sheet, no cash flow statement. That means, as per Companies Act, the provisions of profit and loss account and balance sheet is prepared. But cash flow statement is not prepared as per Company Act. The format is not given in the Companies Act. It is given in Accounting Standard 3. Cash flow statement is also not compatible with the tax law of the country. That means cash flow statement is not also provided format wise in the tax law. Cash flow statement does not help in measuring efficiency. It shows the cash position in a public utility service. The cash flow statement does not show the efficiency. So these are the introduction part of cash flow statement. Friends, in the Next class we will go for the difference between cash flow and funds flow, and what are the formats that have been prescribed under Accounting Standard 3. We will go through the format, and then we will go for the different varieties of problem, starting from the primary problem to very hard problem. Just you keep in touch with the class. So if you like the video, please subscribe and circulate among your friends. We will also come out with the suggestion especially for the BCom Calcutta University, because their exam is very much uh, 10 to 15 days ahead, and we will also come out with the suggestion important questions for professional exam and other exam as and when there will be an exam situation. So friends, if you like, please subscribe, offer your comments. So meet you in the next class.